Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hello everyone, checking in on the dollar, gold, and miners. And just a heads up, Chart Guys James is going to start doing some videos here during the week to help ease my load in terms of doing some commodities, and gold is going to be among them. So a bit of a different perspective. I'll still do gold on the weekends and such, but on the average daily weekdays, not going to be putting these videos out every single day anymore, but James will certainly be taking over, and you will see that he is competent as well. So looking at the dollar on the hourly time frame, and as we headed into the end of last week, the RSI on the hourly time frame was oversold. So I prefer being cash overnight anyways, but I will always exit a position. If I were bullish miners, I would exit because the dollar is oversold, and I would anticipate that the dollar would see an oversold bounce over the weekend when we began trading Sunday night, and my hands would be tied in my position. And that's exactly what played out. Higher lows and higher highs, seeing this oversold bounce play out, which meant weakness in gold. So gold, when we were heading into this morning, we had that breakout on Friday, and certainly breakout is not the kind of word that I would use, but a bull break on Friday. We saw normal healthy consolidation heading into this morning, and what I was pointing out this morning is this lower high pattern, 1236.70, lower high 1234.84. So if the bulls cannot break 1234.84, how are the bull miners going to see any upside if gold can't break the lower high pattern? So heading into the morning, I was saying that if we do not break 1234.84, the bulls don't have any momentum to the upside. So we made our bullish attempt here heading into the open. We got up to 1234.34, 50 cents shy, another lower high. Look at the bears respond. They say, okay, bulls can't break the lower high pattern. Let's jump all over this. Spike in bear volume, 4 hours to the downside. The bears are still in full control of gold, and this is the second time in the past 4 days where we have seen a clear, strong, bullish reversal candlestick with bulls buying the dip in a big way and zero follow-through the next day. The bears fully in control. So that is a red flag in the sense that the bulls are unable to confirm a reversal candlestick. We're looking at support of 1222.72 and then down to 1216.58. Keep in mind this is just red week number 2 on gold. We saw gold make multiple months to the upside on this bounce. This is just the second red week in a row, and really it's just the first day of the second red week. So gold has not consolidated much at all, and it is the miners that are consolidating in response to the odds of a rate hike a week from Wednesday being likely. So GDX not able to confirm the bullish reversal candlestick on Wednesday to Thursday, not able to confirm it on Friday to Monday, and a lower high, lower low pattern now 7 days in a row. If we cannot break a lower high, lower low pattern, the bulls have absolutely no momentum, and the bears are in full control. 21.35 is support. We're looking down at the next support level of 20.98. There's not a ton of supports down in these ranges. It's a wide area, a steep drop before we encounter the next support from each level. 20.98, 20.79, 20.45. Because we didn't build a lot of support in this period when this bounce first got underway. So we need a bullish reversal candlestick on the daily, and we must confirm it. Without any confirmation, we just see this red, green, red, green, red, green back and forth, favoring the bears with lower highs and lower lows. Weekly time frame back to testing the 200-week moving average of 21.71. We bounced off of it last week, and here we are testing it again. Bulls really want to hold this level by seeing some upside by the end of this week. That's the goal for the bulls to close above. Ideally, seeing a bullish reversal candlestick, need to close closer towards $22 to see that follow through. GDXJ losing, same thing. Lower highs, lower lows, 7 days in a row, unable to confirm. Look at the bear volume compared to the bull volume. And I did point out that JNUG volume on Friday, and we didn't get any follow through on that volume into today in terms of any kinds of clues. Still high bear volume, so no follow through for the bulls. Just a difference to be noting. Anytime you see a discrepancy or something that stands out, always worth noting, but I would never make a bullish entry just because I see one little thing out of the norm. It's just taking a bunch of clues, putting all the pieces together. But again, if the gold bulls can't confirm a reversal candlestick, these bull miners are not going to be able to confirm one as well. So look at the bear volume the past 6 days compared to the bull volume. Dump, bounce attempt, very weak volume comparatively. Dump, bounce attempt, weak volume comparatively, and another dump. The bears have been owning the volume 3 of the past 6 days. If you were to add those all up, it would likely be about 60% as much bull volume compared to the bear volume. The support here on GDXJ is 32.90, and then we're looking down at 31.13 as the next level from there. The weekly time frame just lost that middle Bollinger Band last week. Now the high of this week is rejecting from it. The 200-week support's down at 31.33. And the bears are still in control. So 4 weeks of consolidation on the miners, only 2 weeks of consolidation in gold. The miners got a head start to the downside once the odds of the rate hike started to get more and more likely. So we'll be watching to see if the bulls can get another bullish reversal candlestick tomorrow. They have to start from scratch, so to speak, in terms of looking to confirm a reversal candlestick. It's going to take 2 days before that can happen at the earliest. So goal for the bulls, break the lower high, lower low pattern. Form a higher low on the daily time frame, and that will be bare minimum step number 1 for the bulls to start to prove that this trend may be changing for the short-term bull bounce. But as of right now, bears are still in control, and JDST has been seeing some nice gains to the upside, as has DUST. So I appreciate you watching, and we'll see you soon. James will be covering a lot of videos. I'll be back on the weekend videos, and I like that nice mix of different perspectives. When we both give our analysis, we're not watching each other's analysis, so it's really an unbiased singular opinion. So thanks for checking in, and we'll see you tomorrow.